Investing is a sport that doesn't lie. The long-term track record is the only thing that matters. It was a new experience for me. Yeah, I mean, I was making millions of dollars and I lost millions of dollars. It's weird because you have the money pouring into your account like you're a drug dealer. And then you've got people DMing you and think you're the genius all at the same time. So it really messes with your brain and just the way you make decisions. You look at Saylor's track record. The strategy didn't make him a billionaire, right? It was investing in Apple and Facebook in 2012. That's what made him a billionaire.
I really want the best. I don't want the average.
It's flawed thinking you need income to spend money. Like if you have Bitcoin and it's compounding at 40% annually, you have to figure out if your other investments are going to compound faster than that.
Hello, everybody. Today, I'm very grateful to be joined by Dan Hillery, a MSTR options trader, member of MSTR True North, and a true market wizard. Dan, how are you doing today?
I'm doing well. Sorry, my mic was off. It's good to be here. I love the stuff you guys do. Just trying to, just taking it all in. Bitcoin's up, right? Life's good.
Bitcoin's up. Life is good. So yes, you have had quite the year. Beginning a journey of content creation to joining MSTR True North to being on stage at the MicroStrategy conference just recently. So let's take a bird's eye view of what just happened over the last year, and let's zoom out and go back to last November when MicroStrategy at the time was peaking. We were over $500. There was just euphoria. Tell us what it was like for you being in the middle of it all, your thoughts, your emotions, and anything that you have learned in the time since then.
It was a new experience for me. Yeah, I mean, I was making millions of dollars and I lost millions of dollars, and that's exhausting. Kind of nerve-wracking. You don't really know what's going on, so it was a weird experience. And then it's weird because you have the money pouring into your account like you're a drug dealer, and then you've got people DMing you and think you're the genius all at the same time. So it really messes with your brain and just the way you make decisions. So I think for anyone in a euphoric kind of place, it's very easy to get clouded because it's not just the money, right? It's the validation. You're getting flown out. I was getting flown around the country at the same time. So it's all just very crazy. So it's tough to keep your head as a trader. I think it's very, very important, especially if you're on social media.
Yeah. Trading in public. This is the first time you've ever done it, right?
Yeah.
Talk about the decision to do that, and is it gut wrenching? Do you ever worry about what others might think or say, or how they treat you?
Yeah, I think it's cool. People want to see if you're putting your money where your mouth is, I think. And I think I always appreciate when people post their positions. And similarly, I think it gives me more credibility. It's oh, look, he can talk all you want, but if your money isn't there, it doesn't matter what you say. So I really do believe just putting your money behind your decisions is important and just gives people authenticity.
And let's talk options in general, right? I mean, you can play just spot positions, and that has its own volatility and roller coaster ride to itself. But options is a whole other level. You have to be right about many things at once to really strike it, right? So talk about getting into options and what kind of education did you need to really start playing the markets on this level?
Yeah, options are pretty interesting because it's difficult to price them. And there's a famous Warren Buffett and Charlie Munger scene where they say Black-Scholes doesn't really work for longer dated options. And that's quite true. So Black-Scholes is this mathematical model that attempts to price options based on timed expiration, implied volatility, or historic volatility, strike price, and all this other these criterion. But it's difficult when you think a year out, 2 years out for an equity or something like Bitcoin. How do you price that option? Where's it going to go? And everyone's got a different view on Bitcoin, on strategy, on Semler, whatever it may be. And so I think it's cool playing with long-term options because you can express ideas about Bitcoin or MSTR in a way that most people. Or you can express ideas about the equities in a way that you can't with spot. So in spot, if you're holding spot, you're thinking, if you're holding spot, you probably think it's going to go up over a long period of time, right? That's why you would hold spot. But you could hold spot and then sell your upside with a covered call, and you're making a bet that it's not going to trade up X amount of dollars in this time frame that I've given it. So it's kind of cool, right? And then you can be creative. And it's like, oh, well, I'm going to sell a put. I'd be happy buying here, but I want that premium in case it moves up X, Y, or Z. Or I'm going to go long because uh, my whole thing is like, I don't really like, I love strategy, but I think options on Bitcoin are just super interesting because if you believe this whole thing that like the fiat system is decaying and printing will lead to mass monetary debasement, which I believe, uh, it's kind of cool thinking about buying an option on Bitcoin when the fiat system's melting and then Bitcoin's becoming this hard asset. So it's like you can't really price a Bitcoin option in fiat. So if you kind of start from a point of strength, and maybe you have an edge because you're looking for an edge, right? If you're trading options, you have to find an edge. It's like playing poker. Like you don't want to go sit at a table with a bunch of people who are way better than you. Similarly, you don't want to go trade zero DTE options on the SPY against the best machine learning algorithms in Jane Street. Like that's not what you want to do. So that's why I think long-term Bitcoin options are quite interesting.
And when you're trading these options, you can have multiple plays on one stock, right? So do you spread that out across different Bitcoin treasury companies? Or are you just all focused on strategy options right now?
Yeah, Bitcoin treasury companies are. I've had some big losses on Semler over the past few months, but I focus on strategy. I focus on Bitcoin, like IBIT, FBTC, because I just know them the best. If you don't really know, it's all about trust, right? Like if you're going to bet long on a company, if you're going to go long over a long period of time, you have to know they're going to continue to execute in the way they have said they will. And so for like an ETF, for example, I actually prefer Fidelity FBTC options. Everyone says, oh, well, they're a little bit, less liquid, X, Y, and Z. Yeah, but I'd rather make sure because Fidelity custodies their own Bitcoin for their ETF, so I'd rather make that bet that they're going to be in business in the next year. So if you're buying a year long option, I mean, you got to bet on something that's like a sure thing, or you believe to be a sure thing, or at least is going to like for strategy, for example. If you go and buy a year out option and you don't know if the company will even continue its Bitcoin strategy or will adapt its Bitcoin strategy in a negative way, you can't make a like you don't have all the variables are changing on you. You don't want to make a bet and then have the variables change that you made the bet on. So for me, I like strategy, like I bet I like FBTC, and then you can make spot bets on Bitcoin treasury companies too. That's cool.
And getting into Bitcoin and strategy, what was first for you? Did Michael Saylor open your eyes, or did you teach yourself about Bitcoin before you started this whole game?
I liked reading books about Bitcoin. I read the Bitcoin Standard, all that stuff, and it did make sense to me. I mean, the inflation thing is kind of ridiculous. The fact that it exists, but I think for me, the thing I couldn't reconcile was the fact that I know this is kind of a weird, but like I learned about Renaissance Technologies, which is the top performing hedge fund since 1984, when I was in when I was in high school, and they've returned before fees. I think it was 65% annualized since then using algorithmic trading. And, I'd always run like the compound interest calculator, be like, oh, how much would $10,000 investment be worth? And the numbers are just astronomical, completely insane. So I couldn't rectify it. It's like, okay, so 95% of hedge funds, don't outperform the index. This one hedge fund completely slaughters the index. And then you got these companies that do outperform the index. Like if you just bought Apple, you would have been, way outperform the index. So I'm like, okay, there must be a way to and then I was like, well, I'm not going to start a tech company. So I was like, I need to invest well, and Bitcoin seemed like a logical way to do that.
What year was that you opened your eyes to Bitcoin?
2021. I was aware of it 2020, 2021, but I didn't start really buying until FTX collapsed.
And I've heard you say that being too idyllic about Bitcoin has gotten you burned in the past. So how do you reconcile your philosophical beliefs about something as a trader?
Yeah, I think that's a good one. Well, here's an example that I would give is like let's say you're out there and you're super idyllic about Bitcoin, thinking it's going to go to 100 million next year. You think Bitcoin's going to $100 million a coin next year. So personally, I don't believe that, but maybe let's say you do. So therefore, you go out and buy zero point 0.1 Bitcoins and sit on it and go, I'm going to be rich. That is a recipe for not success. All right. And so I think similarly, if you're trading options or you're going long, you could be very idyllic about Bitcoin and go buy, super far out of the money IBIT calls for next month or for next quarter or something like that. But you're going to be wrong and you're going to be disappointed. So you have to keep your expectations in check. But you can also be long-term focused and very, very bullish on Bitcoin. And so that's kind of the two things I try to reconcile.
And so your open trading history has coincided with a content creation story too, right? I found you when you just started posting videos of yourself on X. So how did you start doing that? And tell us how that led to you with MSTR True North.
That's a good, yeah, you found me way before I like knew anyone, so I really appreciate everything you guys did for me. That's really, really big, so thank you. I was just posting videos of my analysis on strategy. I think it was because I had a bunch of money in strategy, so I was trying to figure it out. But I was posting the videos because I studied engineering in college, and I was studying masters in engineering, but I was never the best engineer. But I was always pretty good at communicating, just talking to people, and that was a skill I found most of the engineers didn't have. I always believed there was a place for me in the world where I was talking about complicated things and making them a little bit more simple. And I like making videos, so that was kind of what I did. And I'm not that agreeable. I'm not great at working for people, so this was kind of a perfect combination.
Nice. And I mean, that has turned into being a part of MSTR True North. And you guys were just at the Strategy World Conference. And there with Saylor, he finally sort of recognized you guys and opened up his arms and gave you guys the flowers that you deserve for helping to spread the word about his stock and his mission and the brilliance behind his strategy that a lot of people don't see, right? So what was it like at the conference? Did you learn any inside information? And yeah, what was it like being up on stage and stuff?
Um, yeah, I learned a couple important things. I'll skip the BS for people listening. I think really important couple important things. One, strategy loves a preferred stock, and they will issue as much as they can. And so people need to be thinking about the preferred stock in a way they aren't right now. So in my trading account, I levered up fully on margin on STRK. And the reason is I think that product's really undervalued. But they're going to continue to push the ATM on those preferred shares, which is huge and I think big, and it's going to be big for the BTC yield. So that's something, and they really, really like the management team really likes the stock. Um, they're not trying to ATM people into oblivion. That's what people are assuming. Um, right now, they're using the ATM because they have to keep the yield up. If they drop the BTC yield, um, you're out of like if there's no BTC yield, there's no premium. Like sorry, like this is just how it works. And so long as they can't issue enough volume of STRK ATM, they're going to have to do Class A ATM. So if you want Class A ATM to be put on the back burner, buy some Strike. That's what I would say. So they're thinking about the shareholders. Fong Lee, he owns about $600 million worth of strategy Class A shares. So he's in there. They're in there with you. And other things, they're not going to lend out their Bitcoin in a way that I had originally thought was part of my thesis. So I thought they were going to port their Bitcoin over to JP Morgan and get a 5% yield. They're trying to do that with Strike and Strife. And when you think about it, that is what they're doing. They're actually getting a fiat, they're getting a yield from their Bitcoin as collateral for those products. So it's very similar, but it's more trustworthy. Like if they were to transfer all their Bitcoin to a central institution and that institution was going to go underwrite loans, like that would mess up the whole thing as Bitcoin is collateral because now the Bitcoin's um, encumbered via like risk. So you wouldn't want that. So that's kind of where the company's going. In terms of there's a lot of big people, there's a lot of big money, and then so the social takeaway from that whole, we had our own event, True North event on Monday of the conference. We had a lot of people come there. There's a lot of big money like around. So if you're a content creator, if you're Bitcoin Magazine, whatever, you guys know this. Like there's so many people with so much money watching everything you do. So behave well, and there's opportunity for people who want to be here. And you don't have to chase the shiny thing. There's going to be a lot of stuff coming up in the next few months, so just like stick to your guns. So that's pretty important too.
I wanted to briefly interrupt today's interview to give a big shout out to our lead sponsor, Rhino Bitcoin. Rhino is the all-in-one Bitcoin super app built by Bitcoiners for Bitcoiners. Buy or sell instantly. Send sats anywhere on the Lightning Network. Withdraw straight to cold storage. Even turn sats into gift cards or link to a Casa multisig, all within one sleek interface. And Rhino is just warming up. Soon, you'll pay bills, borrow against your Bitcoin, and save for retirement, all without leaving the app. Download Rhino at rhinobitcoin.com or tap the link in the description below. Use promo code Bitcoin News and Rhino will drop you $10 of free Bitcoin into your account today. Secure your stack with Rhino Bitcoin and enjoy the rest of the video. Let's talk about the explosion of Bitcoin treasury companies that we've seen, right? There was Metaplanet last year, Saylor Scientific. Now we've got 21, Nakamoto. Do you see these guys as head-on competitors with strategy, or do you think that this is a team that can all win together?
I don't think they're competitors. I mean, it's what you're looking for. Obviously, if you could catch the beginning period of a BTC Treasury ramp up, it's better. It's advantageous. You'll get, a higher return. We're seeing that in Metaplanet today, and I don't. Yeah, maybe they'll take some diffuse. What do we call it? Maybe they'll take some capital away from strategy into these other treasuries. I could see that happening, but all this stuff's built on trust, and so I think any long-term player, if they want access to a Bitcoin treasury, they need the most trustworthy, stable, and liquid company. Right now, that's strategy. That could change, but yeah, I think strategy serves. And then you look at the options markets on any of the other ones. There's no liquidity there, so you have to. A lot of what makes strategy valuable is the platform on which you can create these options products, right? MSTY, IMST, MST, all these products. And so until those other options markets become more liquid, it's going to be tough. And then also people aren't going to make long-term bets in the same way they do on strategy if these companies aren't as reliable and execute as well on that strategy. So
Yeah, I mean, we've just seen that really this week. It seems like Metaplanet has really taken a lot of the mind share of at least Bitcoin Twitter, right? And would you chalk that all up to just the ATM sales that have been going on at a nonstop rate for strategy, or is there something else behind it?
um, maybe just size. I mean, everyone loves the size. There's favorable laws in Japan for a Bitcoin equity. In Japan, Bitcoin's taxed at 50%, whereas an equity's taxed at 20%. So that's, hugely advantageous. There's no short selling in Japan. And then, yeah, the ATM, I mean, I don't think the ATM for strategies is the reason the stock hasn't been pumping. People just don't find it as interesting because it's so big. Much like Bitcoin, in 2022 and 2021, well, especially kind of pre-ETF launch, people were like all trying to rotate into Ethereum and all this other stuff because the market caps were smaller. They thought there was higher beta and Bitcoin just wasn't going to perform. But looking back, obviously Bitcoin would have been a really strong performer. So I think that's got a lot of what's going on here. Everyone's running to the next big thing, the smaller company. I like strategy. I do. I'm not trying to hit like a 10x on the. Oh, this is the other thing. This is like a philosophy thing. A lot of people they're going to go to Metaplanet or they're going to go to these other companies. I love Metaplanet. I own Metaplanet, but they're going to go to some of these smaller Bitcoin treasury companies because they can get better BTC yield in that ramp up period, and so they'll look for higher returns. I think that's cool. It's a Bitcoin play, but the reason I got into Bitcoin treasury companies in the first place was because I wanted to bet on Bitcoin and not use beta on something else. A lot of people go looking in Ethereum or these altcoins for beta, when really that's actually not beta. You want leverage on Bitcoin. So now that the Bitcoin options markets come out, I think a lot of people looking for leverage on Bitcoin should be looking into the options chain on IBIT more so than maybe a Bitcoin treasury company because there's a lot less trust involved in taking leverage on the Bitcoin. So yeah, just something I think about.
And just while we're still on Bitcoin treasury companies, you mentioned Semler before, and we were in a period where they were trading below the value of their Bitcoin recently, right? So if a Bitcoin treasury company finds themselves in that position, what do you think is best for them to do?
I would say buy back shares, sell Bitcoin and buy back shares. I know the market wouldn't like that, but if you demonstrate a willingness to do that, then the market won't ever price you below. It won't ever, but it's unlikely the market will price you below book value. So I think that's actually a cool strategy, and I know Josh is a big advocate of it. I don't think these companies are going to do that, but yeah. And then I guess you could just take on a bunch of debt and then you get yield that way and then your multiple will rise again. But it's going to be tough. Like a lot of these companies are going to trade at book value at some point. Like maybe, strategy will trade at book value and it'll oscillate. So we'll see.
And the other big Bitcoin treasury company that just entered the room, of course, is Jack Mallers and 21. It still is a little unclear as to how exactly they are going to make their mark, right? I mean, they're going to have 42,000 Bitcoin to start off with, correct? But in terms, they say they're going to be the most pure Bitcoin play, right? Do you have any insight as to what their business model will be as a Bitcoin treasury company?
No, I haven't done any research on them. I don't own that company, so I can't speak on it, unfortunately. It's tough to keep up. You're gonna have like there's gonna be so many of these companies. They're gonna need a lot of analysts. Anyone who wants to be a Bitcoin treasuries analyst, that's gonna be a cool job at a bank or something.
Yeah, absolutely. I mean, just at Strategy World, I mean, they said there were 70 Bitcoin treasury companies. I think just in the last 2 weeks, there's like 30 more, right? So now there's over 100, and there's going to be 700 in the next 12 to 24 months, right?
Yeah, and can I just interrupt there too because there was an interesting comparison I was thinking about. So that all companies or most companies capitalize on T-bills or U.S. Treasury bonds, and but most companies aren't banks. So I think that's really interesting. Looking at like Bitcoin treasury companies, there's going to be a lot of companies that use their operating cash flows and sweep them into Bitcoin, saving in Bitcoin, capitalizing on Bitcoin. Then there's going to be other companies that offer financial products backed by their Bitcoin, and that's their main source of revenue. And so I think that's an interesting distinction. We'll see how those two things play out. I think the financial products backed by Bitcoin is going to be a winner take most scenario, where I think there'll be a lot of Bitcoin treasury companies that just sweep their cash flows into Bitcoin and focus on their operating business.
Yeah, I think that's a great distinction, especially moving forward as this market matures. And so I guess the next question I have for you is what happens in the next bear market with these Bitcoin treasury companies? And do you think that these companies could be the reason that we have the next bear market?
Yeah, I think there's this idea that a lot of them are over leveraged, and I haven't seen a lot of examples of over leverage by any means. But I think there'll be a lot of money flowing out of them in a bear market, and the multiples will compress. But like, I mean, we saw that this last bear market. The strategy was trading like a 1.4 MNAV at one point because Bitcoin was like dumping to 75K. That was a mini bear market. So, I mean, I would expect something like that to happen. And then for the companies that can't meet their debt service with their operating cash flows, so they have to issue ATM to cover that. That won't be great, and they may trade it at a discount briefly. Um, so yeah, I think as a shareholder in any Bitcoin treasury company, a bear market's not your friend. Do I think they're all going to like blow up? Not really. Like I think it's fine.
A new metric that Saylor brought up at the conference is Bitcoin torque.
Yeah, yeah.
What do you think of this metric, and could you please explain it to the audience?
Yeah, Bitcoin torque is like the return on a Bitcoin investment when issued by strikers. The way I understand it, it's very simplistic, is if they go out and issue, so let's say they issue Strife right now, right? So Strife has a $100 liquidation preference. It's trading at like $97 or $98. So what that means is they issue a share of Strife into the market, then they get $100 worth of Bitcoin. They have $100 and they deploy it into Bitcoin, buying $100 worth of Bitcoin. That $100 of Bitcoin backs the entirety of Strife. So they don't actually capture a yield there, right? Since as a Strife holder, you're entitled to $100 worth of Bitcoin. That Bitcoin they purchased using the proceeds of a Strife sale now just backs the Strife, the $100 to $100 because of the liquidation preference of Strife. So in the case of MicroStrategy going bankrupt, then the Strife holders are entitled, each Strife holder is entitled to $100 worth of Bitcoin. So there's no yield there in theory, right? There's no yield technically. But the yield comes as the price of Bitcoin continues to rise. So now if Bitcoin trades at it trades at double in a year or 2 years, then you've accrued $100 to the Class A shareholders in theory, because your Strife is still only backed by $100 worth of Bitcoin, but the Bitcoin that was purchased with the Strife proceeds is now worth $200. In theory, that $200 gain is captured by Class A shareholders. Its value accrued to them as they have a call option on the excess assets of strategy when you subtract out the preferred holders and convertible holders. So that is what he refers to as torque. And then that continues to increase as the price of Bitcoin continues to rise into perpetuity. So that's how he's kind of conceptualizing capturing that yield. It's different than ATM.
And as someone who has consumed a lot of Saylor content over the last 2 years and have gotten close to him in some regard, closer than most, how would you say his approach has changed, the way he communicates? What can you see as the evolution of Saylor over the last 2 years of being very close into him and his operations?
My understanding is that the strategy has, like, I don't think he had this all planned out by any means. It's evolved and shaped and grown, and these preferred equities are the evolution of it. So I think it's all pretty interesting. I mean, he seems pretty supportive of everyone. I think, he's won in terms of the Bitcoin Treasury strategy, so he's confident and content. And, I think he's looking to issue more preferred share products into the market because he's got this massive stack of Bitcoin and he's got to make it productive. So I think he'll keep using these preferred equities to do so.
And I mean, this gets thrown around a bit on Bitcoin Twitter, but I mean, if this does work out for him, where on the pantheon of great American business leaders do you think this puts him?
I I don't know. I don't think he'll get a lot of credit. Yeah, I just don't think he'll get a lot of credit because like he saw something great, capitalized on it, but it wasn't like his ingenuity or he didn't invent Bitcoin, so people won't give him a lot of credit. Um, yeah, maybe he goes down in history as like the greatest investor of all time. I hope he does because I don't love I love Warren Buffett, but people give him way too much credit. He was a great operational and he operated a fantastic insurance company and but had he not bought Apple, his returns wouldn't have beat the S&P 500. So there's stuff like that where there's certain people that go all in on the right idea repeatedly over and over again. The guys like Saylor, and they just don't get credit, at all. Like Rentec, right? No one talks about Renaissance Technology as being the best quantitative trading firm, best hedge fund in the entirety of the world. They talk about some random hedge fund that underperforms the S&P, and they're like, oh, they're great investors, like Bridgewater, for example. I mean, the returns are just trash, but it is non-correlated, so I guess that's like good. I don't know. Like Renaissance Technology hasn't had a down year, and people are still talking about Bridgewater. Like investing is a sport that doesn't lie. That long-term track record is the only thing that matters. It's the only thing that matters. And you look at Saylor's track record. Strategy didn't make him a billionaire, right? It was investing in Apple and Facebook in 2012. That's what made him a billionaire the second time around and stay a billionaire. And then it was Bitcoin. And so I mean, his compounded annual return on his capital is probably just as high as Renaissance Technology. So that's, he doesn't get enough credit for that. People don't get enough credit for that.
Yeah, and he was saying that he uses AI a lot, right?
Hmm.
It helps him come up with Strike and Strife. Are you using AI for your trading and analyzing the market?
Yeah, I use it for everything, build software products and stuff. But um, I think this idea that like prompting AI is like this new crazy thing. It's like a better computer and it helps you implement your ideas in a way that you could never before do so. So that's fantastic. But people really fantasize it, romanticize it like it's this crazy thing. It's like your ideas still have to be fleshed out. You still have to execute properly. The time between idea and implementation is a lot smaller, and it is good for a creative process. I don't know. I think it just unlocks the human spirit, but I don't think it's. Yeah, I think it just unlocks the human spirit. And obviously, yes, I use it all the time.
Yeah, it'll be an interesting end of this decade to see how it all does play out. But
Yeah, totally.
it's a good reason to have hard assets and things that they can't print or make up out of thin air, right?
Yeah, exactly.
Cool. So yes, I want to then bring up this interesting thing that happened this week is a class action lawsuit against Strategy. Did
Mhm.
you hear about
I
this?
saw that. Yeah. Did you see the details of it? I wasn't able to see the details. I just saw it in the 10 or in the 8K.
Yeah, it seems pretty frivolous. They're being sued for misleading investors about essentially, I think, the change in accounting that happened the first quarter, right? And saying that that
Okay.
was misleading to investors. But I think it just goes to show that once you start making a lot of money or making big moves, people come for you, right? And
Yeah.
that's what's going to be happening here. Speaking about other people who are speaking maybe negatively about Saylor is Josh Mandel,
Yeah.
somebody that you've had the pleasure of communicating greatly with, and I think you say that he's helped shape your vision as a options trader, correct?
100%. Yeah. I feel very lucky to have met him.
Yeah, tell the audience about Josh for anybody who might not know him, his epic call for 84K, and anything else that comes to mind.
Yeah, he made that call in, I think it was November, that Bitcoin would trade at 84K on March 14th. He nailed it to the T. He was in the strategy trade. He hopped in September. He had 2.1 million in options premiums that he turned into 25 million, and then he was selling in the money covered calls down to 84K, and then went long. And I think he's kind of scaled out of strategy as of now. But Josh is just a sharp guy. He was a Solomon bond trader for a while. He's just super knowledgeable, super sharp, understands how markets work, how market makers work. It's not something that anyone else in the space, no one else understands the order book. No one understands. No one was a market maker for the options chain. Like he was pen and paper, pencil and paper, like notepad, creating bid ask spreads for different options across the market at Solomon Brothers, right? And he was a short dated derivatives trader at Caxton Hedge Fund as well. So, I mean, he's been doing this for years and years and years, so knowledgeable. And he's seen the mechanics of a market in the way in which like most of these modern people haven't, right? Like I've never created a spread as a market maker or anything, and now it's all done via computer. So Josh is, you can't, I wouldn't go up against Josh. Now he's turned a little bit bearish on strategy, which I totally get. He doesn't like the ATM. I don't want to put words in his mouth, but I don't think he gets along. He sees eye to eye with Saylor, which is totally fine, to each their own. I'm still happy holding strategy, but if he's not comfortable, I mean, maybe he sees something I don't. And I'm about to get steamrolled, and yeah, that's the way it all plays out.
And one thing he's brought up recently is about the custody of strategies Bitcoin, right? He says, hey, this is blockchain technology. You should be able to point to it exactly where it is, lay it all out like El Salvador does, like Metaplanet does.
Hmm.
Saylor has always said for years that it's a security concern and that he will not release the addresses of where they store their Bitcoin. What's your take on strategy and their custody solution?
Yeah, am I frozen? Working. Oh, there it is. Okay. Um, yeah, no, I'm a believer that they shouldn't disclose the addresses of their Bitcoin. It's a security risk, and it would create a lot of hubbub in the market if they choose to move Bitcoin between wallets. So I'm not in agreement with that, and I'm not a super skeptic. I know Josh is a diehard Bitcoiner, and proof of reserves are everything. I don't know. I just don't. They're a public company. They get audited. I'm comfortable with that, but yeah, to each their own.
Yeah. Okay, cool. Now I would like to transition over to all these different products that have been spawned out of the strategy universe, right? So I'm going to shout out some tickers, and I just want you to say the first thing that comes to mind. Cool? All right. First
Perfect. Yeah.
one, MSTU,
Leverage.
MSTX.
Are these one word?
Yes.
More leverage.
BMAX,
Converts.
Strike,
Collateralize upside.
Strife,
Bond.
Misty.
Waste of time.
Oh, then let's dive into that. That had been the talk of Bitcoin Twitter for a month or so. All these people thinking that they're going to be able to create income for the rest of their lives by trading in some of their Bitcoin for this income play. Misty gives you a dividend on a weekly basis, correct?
I think quarterly. Or sorry, I think monthly.
Monthly.
You
Okay.
can change it, yeah.
But yeah, you say waste of time. So yeah, it seems a little bit too good to be true. And if you spend time in markets, you soon realize that anything that seems to be too good to be true usually is, especially on the long scale. So yeah, tell us about Misty and why you don't believe in it.
I think the principle, the idea. What do? They buy. So there's a rule of the 1948 Securities Act that says it's a diversified ETF can't hold more than, I think it's 75%. It's 75 or 85%, can't be concentrated. So of 75% of the entirety of the ETF, then more than 5% can't be in a single security. So the way they work around it is, uh, MSTY holds like 75% US Treasuries, and then they take a long call position and then sell calls against that long call position. Or they'll do something like they'll sell puts, or maybe they'll be totally long. The idea is just they're returning dividends to their shareholders every month. And in theory, they're monetizing the volatility of strategy, which in itself isn't a bad idea. You can just monetize the volatility by selling a call on strategy, selling a put on strategy. That's totally fine. The problem with MSTY, in my opinion, is that those yield max funds tend to decay over time. There's massive decay, just historically, and that's how it works, right? Like if you're holding a decaying long position along with cash and then selling volatility against it, those long positions have to be constantly accruing value. So during a bear or a sideways market, that's a difficult position to hold without it decaying. That's not to say it doesn't make you money. Like it obviously makes people lots of money and lots of dividends. So be my guest. I sell covered calls on my long calls, much like the same way MSTY does. So that's not to say I do the same thing. But I think the flawed idea is that this will be around in 10 years. Like thinking in 10 years, I'll be making $1 billion a month from MSTY. The principal won't compound on MSTY at the same rate of MSTR, and the volatility will decrease over time. So for a year long position, absolutely go for it, buy MSTY, but you can't invest in it the same way. Um, but then the real income strategy is like, I think it's flawed thinking you need income to spend money. So, like, if you have Bitcoin and it's compounding at 40% annually or 30% annually, you have to figure out if your other investments are going to compound faster than that. And so, MSTY taxed at 50% income rate or whatever it is may not outperform your spot Bitcoin, as you peel it off with a long term gain if you think it's compounding at 40% annually for the next few years. So that's something to think about. Like it feels really good. And in investing, the thing that feels good tends to not be the right decision. So the reason I stay away from MSTY is because it feels very good to get that monthly dividend. It feels great. But for me, the right decision is finding the highest compound annual growth rate on my capital after tax. And for me, MSTY is not that. It is a combination of short calls, long calls over years worth of time, spot Bitcoin on leverage, and MSTR. That's how I do it.
Yeah, I mean MSTY, you're just getting paid back your own money, right? In little chunks over time.
Yeah, exactly.
And we might be on the verge of S&P 500 inclusion for MSTR, right?
Thanks.
What are the possible roadblocks that would keep that from happening?
Earnings, I think Bitcoin just needs to be above 98,000 by end of June, so we should be good there. Don't want to speak too soon. The committee may deem it not, maybe somehow they deem it not valid because it's investment income, but I don't really see that happening with Coinbase in the S&P. And I think there's huge incentive for strategy to be included in the S&P because it's such a large company. Jeff made a really good point last night. He said that there's only two companies, and he's probably going to talk about this on True North, but there's only two companies over $100 billion that aren't in the S&P. That's AppLovin and Strategy. So we'll see. I think they'll get included. That should that should be fuel for some front running. We'll see.
Yeah, that could put a lot of wind behind the sails, right? Especially if Bitcoin is peaking and everything just lines up in the right order. We could have another November 24 in our hands, right?
Potentially.
Yeah. And so before we go, I would like to have you to break down Strike and Strife in layman's terms, right? If somebody is just a Bitcoiner, they buy Bitcoin, that's what they know. They don't really have much interest in stocks or know anything about it. A lot of people are hailing these as groundbreaking financial products. What are they exactly? What makes them so different? And who exactly are they for?
Yeah, I think they're pretty interesting. So Strategy is a company, and they have all this Bitcoin on the balance sheet. You can think of it. I like visually in my head. I think of it as a big rectangle of Bitcoin, and then there's different rankings in the capital stack. So you've got this big rectangle of Bitcoin, and at the top of the capital stack, who has first claim over Strategy's Bitcoin? It's the convertible bond holders. So the convertible bond holders all will get paid out their principal, or their shares or their bonds will convert into Strategy shares. So that's the top of the capital stack. If the company goes bankrupt, then they are paid out first with the remaining assets on Strategy's balance sheet, which are just the Bitcoin. Below the convertible debt, in the case of liquidation, Strife holders are paid out. So Strife is, you can think of it like a bond, a perpetual bond, and it's a preferred stock. So it sits, again, high in the capital structure. And it sits high in the capital structure, and you get paid out a 10% dividend yield annualized. And that's perpetual. It will go on forever. There are covenants in the Strife prospectus that explain what happens if they miss a payout. So if Strategy misses a payout, there's actually interest accrued on the next payout for shareholders. And then if that payout over a certain period of time, if that doesn't get covered, then Strife holders can appoint board members to the Strategy board to make sure that the payout gets done. So there are backstops in place to make sure that the dividend continues to be paid. That's perpetual, and you can just buy one of these contracts, these Strife preferred shares, and you get paid that dividend quarterly. And so again, when you buy a Strife share, they're traded for about $98. You are second to the convertible bond holders in the capital stack. So in the case of liquidation, you are guaranteed, or you're owed $100 of Bitcoin for every $98 of Strife you own. So it's essentially Strategy is saying to you, if something happens to us, you have a claim of $100 on our Bitcoin stack. And so that backs your bond. And then you can look at the capital stack and see how over collateralized they are, this, that, and the next thing. If Bitcoin falls, how far does Bitcoin have to fall for me to not be covered by their Bitcoin collateral? So a lot of this has to do with collateral and creditworthiness of Strategy. And then below Strife, you have Strike. The way I think about Strike, so Strike is a convertible preferred stock. So it's like the convertible debt, where you can convert 10 shares of Strike into 1 share of Strategy. So that's the way it works. If you hold Strike, you can convert 10 shares of Strike to 1 share of Strategy. Right now, Strike trades at about $100, and you can convert it. You can convert 10 shares of Strike into 1 share of Strategy, which is trading about $400. So 40% of the value of your Strike is Class A, can be represented by Class A MSTR shares. So 40% of your $100 of Strike, Class A MSTR, you get paid about an 8% dividend on that entire thing. The way I think about it is you own $100 of Strike, $40 represents Class A ownership. The other, what is that, $60 is like a cash bond. It's like a Strife. And on that $50, your dividend is actually like 13%. So I think Strike's actually a better product. And for someone who wants to be long the equity. So Strike's a great product in that regard. And it has a $100 liquidation preference as well. So if Strategy goes bankrupt, you're owed $100 for every Strike share you have, and that's collateralized by their Bitcoin. You get paid out before any Class A shareholder. That's the way it works.
And they are looking to attract the fixed income market with these products, right?
Yes. Saylor, I think hasn't he said something about trying to get 1% of the 300 trillion fixed income market, which is a good idea. I mean,
and so this is more of a product for, would you say, retirees, people who are trying to live off of that coupon, or right, because you're not going to see the same upside that you see with just MSTR.
Yeah, it's a cool interest rate play. Mm-hmm. Cool, like for someone like me. So I bought a ton of Strike on margin because I said, 40% of the value is MSTR, and then you have this 60% of the value represents coupon, in my opinion. And so that has like a 14% coupon on just the cash portion. And I think interest rates are going to come down over the long term. So you can kind of bet on the capital appreciating. So I think Strike's going to appreciate substantially. But for someone, so for if you're a retiree, you want to add this to your portfolio, yeah, absolutely. Where else are you going to get an over collateralized 10% bond? I mean, that's pretty hard to find. That's all with Strife, for example. That's all you're getting, an over collateralized 10% bond. I mean, most companies collateralize their preferred shares with future cash flows, which I would argue is less reliable than actual Bitcoin on the balance sheet. But you have to believe that Bitcoin's not going to zero. If you believe Bitcoin's going to zero, then like this isn't for you. But if you think the bet you're making with Strife is, I don't know if Bitcoin's going up or down in the future, but I don't think it's going to zero. Strife's your friend. You get the coupon. Life's good.
Nice. As you said, you do have a knack for explaining these things, and for someone who's young in the game, interested in getting into trading, what kind of materials would you advise them looking into to begin this journey?
I would say just like think about the world, figure out. I think investing is more so. I think this idea that you have to go to the public markets and then invest in publicly traded equities as the only way to make money is a terrible way to look at things. I think you should look around the world and figure out where you may have an edge and then invest in that. So if that's flipping deck chairs from the local garage stand, you think you can make a 20% annualized return by flipping deck chairs down the street? Do that. You think you can make a return by buying some, foreclosed gas station down the road? Do that. Like, there's plenty of places to find an edge, but don't compete where the biggest sharks are playing. Like, you have to find something people don't understand to win. Like, there's no reason you don't have to trade anything. You can trade bushes. You could sell bushes off the back of a truck from the local Home Depot. Like, there's so many ways to make money and make a good trade, and it's not only in the public equity markets.
A 20% return is a 20% return, right? It doesn't matter
Exactly.
where you get it.
Yeah, and then leverage. People don't talk about leverage or think about leverage, but leverage is a huge part of an inflationary society where you make that money. So you want to get leverage. You want to get leverage and then not get liquidated. You want leverage on something that you're extremely confident will go up in value over time. Real estate has essentially, real estate is a great example of that. It's all leveraged. And once you realize a mortgage is just leverage, you start to think of leverage differently. And so that's hugely important in my opinion. Startups, it's all leverage, right? You're getting funded by VCs. Like, everything's leverage. So.
Well, cheers, Dan. That was a very informative session you just gave us right there. If people would like to find out more, where can they find you?
My Twitter is on Hillery _Dan Hillery, and I'll be around at all these events. So if you see me, just pull me aside. Hopefully I'm not too drunk and I'll have something to say.
All right, man. Well, I look forward to seeing you in Vegas and catching you on the internet, man. Big things ahead.
Awesome. See you in Vegas. Thanks, Rob. This is great.
Cheers, man.